Hello, and welcome back to Crypt. Oh my god, the market is a bloodbath, but let's try to find some signal to the noise. What do you say? Alright, chat, so here's where we stand. In the fear and greed index, we're obviously quite far along in the extreme fear. Bitcoin took a really big bath yesterday. We went down, basically taking the $100,000 price tag, moving it all the way down to, I think, 86,000 was a floor that we're seeing. And let's see why this is happening. Is it going to stop? What should we be doing? I have been through a lot of these cycles. I think this is actually par for the course, and I really truly believe that the news is positive in a long-term run. It is not short-term. I can't tell you anything about that, but let's look into why I think this. Now, one important thing to note, we are coming off the back of the largest exchange exploit in history, $1.2 billion in change to the North Korean government, and they are out there running amok. That is certainly having an impact. This is also mixed with broader chaos coming out of the administration on a presidential level. Now, what we just saw over the course of the past couple days was $1.48 billion liquidated in the cryptocurrency market in 24 hours. Now, why do we even care about this, right? These are liquid longs. Let's just take a moment to think about exchange revenue. This exchange, Bybit, lost over $1 billion. Where does the majority of their revenue come from? It actually comes from trading fees and, most importantly, leverage. Leverage liquidations are just a cash cow for these guys. And we're seeing 1.48 billion liquidated from the cryptocurrency market in 24 hours. Now, why might they want to do that? Well, Bybit made $423 million yesterday off liquidations. So let's just kind of look at this for a second. Bybit is technically short the market, right? They lost ETH and they had to take out a loan to purchase ETH. Therefore, they're in a short position. They're not able to long. They're looking to recoup capital in a fiat term, because that's what they borrowed, to repurchase Ethereum. And in this regard, they're doing a pretty good job. So there is a sort of sub-narrative here that exchanges, especially Bybit in particular, could be looking to wipe liquidations off the map. Now, this is also a fairly healthy thing. Open interest is a sort of metric of the interest in longs and shorts. Those are in leverage. The open interest, when it gets too much towards a long position, can cause a long squeeze, which is basically the leverage gets wiped, it begets the next one, and so forth. It's the same as a short squeeze. When people get too abundantly into shorts and the price moves up past a certain point, the liquidations cascade in an upward direction. All of that is to say that leverage adds more risk into the market, and that a leverage wipeout actually resets the base level to a sort of healthier position. Now, crypto in general is very heavily levered. I think they offer leverage that is too high, and it loves risk. This is the most risk-on industry in the world, for fuck's sake. So a lot of that should be considered when we look at what's happening. Now, of course, Bybit making $423 million by pushing things down, this does really help them fill that gap. And this is over the course of just yesterday. So you can see that there are motivations for what is occurring right now. And let's also just add in some second order effects. There's a ton of hedge funds that trade. I know them personally. If they see the downward market, they're going to unload. Earlier this morning, BlackRock saw hundreds of millions of dollars in Bitcoin and around $44 million in ETH hit Coinbase for instant sells. Again, that is ETF people moving in and out. You can think hedge funds that have short-term capital requirements. They will buy and sell sort of en masse in order to take advantage of cycle dynamics. Now, that's a very short-term kind of thing, right? Now, hedge funds operate their capital in tighter time periods than, say, venture or sovereign-backed wealth funds that have a long time frame. And I do think the long time frame is shaping up to be quite nice. So far, this bull market we've had has been on the back of meme coins, which are baseless crap, and that bubble has largely burst. So we do see an industry hype bubble popping off the back of meme coins that will eventually seek value. Now, some interesting things are happening when I talk to the institutions. They're interested in Bitcoin, they're interested in decentralized finance, and we're seeing some growth in the second of those two right here. The amount of ETH supplied to Aave just surpassed 2 million for the first time. The fact that we're seeing the lending borrowing markets grow, things like Aave that have withstood the test of time, the Terra collapse, obviously this dump right now, this is only emboldening the value proposition of DeFi. So this is an interesting positive positive message. Now, again, I've talked a lot about regulations. I think this is the real juice to the squeeze right now. If we look at the SEC Crypto Task Force meeting logs, they've been absolutely on fire. You have Michael Saylor on February 21st, and there is content around him pushing crypto regulations and Bitcoin innovations. Fireblocks is a custody network, so this is about how to onboard institutions. Obviously, Fidelity Management, Robinhood, same kind of thing. Robinhood wants to transact and trade everything. Paradigm Operations, I spoke to them. They're also adding towards the staking conversation. ETFs, right? How do we use DeFi primitives to build out a more modern environment? Of course, we have NASDAQ. I mean, come on, Jito Labs, that is staking directly. Jito and Multicoin talking about staking in the ETF. That could apply to ETH, that could apply to Solana, a whole variety of things. Obviously, A16Z, a powerhouse of capital investment. Blockchain Association, we know they recently won a very important victory on the broker-dealer rule. So that was the SEC stepping away, saying that these pieces of code that are intermediaries need to register as broker-dealers. It's not possible. It would have destroyed DeFi. DeFi Education Fund, the Digital Chamber. I mean, you can just see in February alone how much progress is being made in trying to build a legitimate framework for cryptocurrencies and decentralized businesses in the US. This is all very, very bullish. Now, that being said, look at the time that elapses just to collect data. They're going to keep doing this before they make a proposal. Any proposal will be open to feedback. All of that feedback will be taken, reproposed, and eventually they will bring this thing to market. This will take time. Again, this is legacy legal and regulatory composition, so this is a slow moving factor. That means maybe now is a good dip to get into value revenue generating assets. I couldn't tell you, we might still go down. One thing to add to this is the SEC drops Uniswap investigation. They've dropped a ton of their investigations into OpenSea, into Coinbase. I mean, the pivot and the attitude of the SEC is so apparent and so massive. I just cannot underscore this enough. They are simultaneously dropping massive cases while also opening up for insight in these new regulatory regimes. So this is moving long tail, very positive for crypto. One of the biggest things that we will see, and Uniswap is very much part of this, is that the SEC had previously struck the fear of God into creators for activating what is called the fee switch, or the revenue generating mechanisms inside a blockchain. A fee switch will usually take the fees generated by a blockchain and share it with the governance token holders. Under the previous SEC, that was very much a securities-like feature. This new one seems to not be treating it like that, and fee switches are flipping on. These are the assets you want to own, the ones that capture value, like liquidations, and share that value with the token holders. A lot of them are doing it in the format of treasury buybacks of tokens, and these are projects with long-term visions. This is the anti-meme. This is a business that generates revenue, that buys back its own asset, and that tries to make it an ecosystem where everyone grows together. One thing that keeps evolving is the Bybit hackers, right? And the Bybit exploiters, the North Koreans, Lazarus Group, have been leaning on Thorchain to do a lot of swaps. Now, Thorchain's getting a lot of bad press on this, but Pump.fun is also being used. They're launching meme coins and they're laundering the money through it. Now, one interesting thing I like to see here is that the Thorchain team has really stepped up and they have started to track the wallets. Now, Thorchain just does swaps, so the wallets on both sides are transparent, and they're basically coming out here and saying hackers tried to launder funds on Thorchain, but every single exploit wallet is being tracked. Front ends like the OKX wallet or the Thor wallet are blocking them. The blockchain never forgets. So every exploit wallet is being identified and blocked. This is very interesting. Now, the thing with blockchain and crypto is, sure, you can do a lot of things to obscure funds on the internet itself. And I guess obscure is the wrong word because they're tracking these things quite blatantly. Now, these ETH might be spendable on Ethereum to do things like pay for gas, but the second they try to convert these back to fiat dollars to take these out of the system, that's where they get stopped. These wallets are being tagged, people are watching them. You better believe the US government is watching them, and we will see what happens with these assets, but hopefully these wallets can effectively make them useless, even if those ETH get held. The best case outcome would be we consider it a burn, that nobody can spend these things because they're essentially stolen funds that no application side wants to accept. All very interesting. Now, last but not least, just a really simple perplexity search through AI, are 20% dips standard in the crypto 4-year cycle? And the answer is yes. I've experienced these time and time again. I couldn't find any hard data, so I turned to AI. Probably something I should go over in the future, which is if you have AI, also verify it. But I've lived through these. I've seen these many times. And mid-cycle corrections, even during bull markets, 20% dips are common and often considered healthy corrections. Again, we call these healthy because at some point the risk and the leverage builds up. People are gambling too heavily, and you need to de-risk the entire market. That's what's happening. Now, obviously, in this case, we're saying maybe the exchanges are doing it on purpose to capture that liquidity revenue because they want to fill that hole. Generating $400 million in a day is pretty insane. If you need to pay back $1 billion, it's only a couple days worth of work. Obviously, you can't rinse and repeat this. Like, the market will eventually come to a consensus and counter trade against that. So this might be a one-trick pony for the moment. But of course, nobody really knows how markets will continue to unfold. All I have to say is I know it sucks. I think selling at this point in time, if you have assets that are good, meme coins probably dead, but if you have good assets, this is probably not the best time to sell. I do think that the future bodes really well, again, for real business model coins. This could be a good time to accumulate some of those, to dive into who's got a good fee switch, who's actually buying back their assets. These are the coins I would like to hold, that I would like to go to sleep on. But all that said and done, I think that the future bodes really well for blockchain as a whole. It could take another 1 to 2 quarters for the SEC to really get a grip around regulation, for businesses to come out and to embrace this. And of course, we're seeing a lot of macro funk and chaos with the Doge committee, with President Trump, and all of the geopolitical elements that are involved. So there's a lot happening. We have to juggle it. But I do think for the first time, the industry is actually being looked at by the adults in the room, and they are figuring out how we can actively proceed. So best of luck to you guys. Stay safe out there, and I'll see you tomorrow.